good morning, students, or good afternoon, or whichever time you're watching this video clip. Today, now, you're going to look at this video will demonstrate to you how you drop a statement of adjusted profit for a sole trader. This is based on what we discussed before in previous video clips. This is for Unit 3. Now, this is a question we're going to go through. Now, it says Martin owns and operates a business in Linstead. His net profit for the year of assessment 2018 was what? 1,200, sorry, 1,200,000 after charging the following. Now, this 1,200,000 is his profit after he would have taken out these stuff, right? Now, we are going to decide now which of these should be added back to adjust the profit, alright? Depreciation must be added back, right? Because based on your notes, it would have your notes told us that that the annual depreciation charge is an estimate for how much of the assets has been used up and is debited as a charge in the profit and loss account. In the tax adjusting statement, therefore, depreciation is added back to the accounting profit figure, thereby increasing the taxable profit or decreasing the accounting loss, and the capital allowances are what? Deducted. So depreciation will definitely be added back. That's all for one thing. Alright, you go down to we call now provision for depreciation that will be added back as well. Sorry, general provision for bad debt, I mean. My apologies. Alright. Now it said that so general provision for bad debt should be added back as well. Alright. Says that the taxpayer's business may be in unfortunate position of being owed uncollectible sums or bad debts, or maybe unable to pay his own debts. Right? Now, in a situation, a general provision for bad debts, such as 2% of outstanding receivables, is not allowed. So, therefore, general provision for bad debts will be what? Added back. Alright? Good. Let's go down to a few notes here as well. Also, tax penalty will be added back as well. Alright? Tax penalty will be added back as well. Good. Let's go down to a few notes here. Now, in the additional information section, it says that salaries and wages include an amount of $39,000 that is paid to Martin monthly. Now, remember again, that all these monies were already deducted from an amount to give you the 1.2 million. Remember, right? So therefore, and this 39,000 is paid to what? Martin, right? What did the note say? If you go back to the notes, you realize that any money that is paid to the owner should be what? Added back. Because it is seen as what? Joins. Good? I hope you would have remembered that. Alright? It is somewhere in your notes. If you read back through your notes, you'll see it. Alright? Any money that is paid to the owner should be what? Added back. Good? Miscellaneous expenses include what? 2,700 per week for what? For a maid. The maid devotes half of her time to the business. Now, you know, half of the money from the money that the maid gets should be what? Added back. Because it devotes half of the time to the business and the next half of the time go to where? The personal businessman, to the owner. Quarter of utilities relate to what? The owner's private use. That quarter should be what? Added back. Good. Capital allowances for the year of assessment amounted to 96,000. This 96,000 should be what? Deducted. And the balancing charge would be added back. Donation to an approved charitable institution of 81,000 were not recorded in the accounts. This should be what? Deducted. And then they paid estimated taxes during the year of 123,000. What should we do with that, gender folks? Gender folks, what should we do with that one? Should we do anything with it? Nope. We should not do anything at all with it. Alright? That is just a distractor. Okay? Now let's roll on to the question. It says calculate Martin's income tax liability for the year of assessment 2018, taking into account the fact that he is 66 years old. Alright? Now we go to the solution now, gentlemen folks. So for the solution now, you would write up Martin, read statement of adjusted profits, year of assessment 2018. This would give you what? At least 1 mark or 0.5 marks. Remember that when you're doing this statement, it is said that you should what, start with our profit first. It says that you must start, you must do what? You must start with the accounting profit first. Starting the accounting profit or what? Loss as given. So you must start with the accounting profit or loss as given. This case is 1.2 million. They're gonna add back what? Depreciation, which is 120,000. Now mid wages now would have been 2,700 as in the question per week, right? If you'd have written the question down, it would have been ideal, right? So that made wages is miscellaneous expenses include 2,700 per week for a maid. The maid devotes half of her time to the business, right? So you multiply 2,700 by 52 to get the entire year. Then you divide it by 2 because half of it, right? So it'll be 70,200 for that one. Private utilities now. Now remember that they said that quarter of the utilities related to what? Owner's private use. So therefore we're going to find a quarter of the 31,500 for what? Utilities. That is the private amount, which is 7,875. That should not be taken out at all. Then you have what you call now, balancing charge. Should be what? Added back. So you go. Right? Is that the case, then, folks? Is that the case, then, folks? He says that as capital related charge which is not allowed as a deduction under the Income Tax Act. However, certain allowances described as capital allowances are given for investment in certain assets and set out by revenue. So the balancing charge is added back. Remember that, okay? It was said before earlier on in our discourse as we were going through the notes. If you go back, you would see it. Alright? Then Reed's salary now should also be what? Added back. Don't it? Good? So Reed's salary is added back as well. We also said before that general provision for bad debt. Now Reed's salary is 39,000 that is paid to Martin monthly. Is Martin Reed, right? So the 39,000 times we give her $468,000, right? That was taken out of the money to calculate profit, which should not be the case for taxation purposes, that is, right? Then you have general provision for of bad debts will be added back as well, and the tax penalty will be added back as well. You get an amount of 756,075 added to 1.2 million. You get 1,956,075. Then now the less charitable donation, which is 81,000, and also capital allowances So you subtract the 177,000, subtract 177,000 from the 1956, 075, that will give you 1779075. And also the question says that he is what? 66 years old. So you get what? Age relief and pension relief. So you subtract 160 from the 1779, and that would give you a 169,619,075. Then your left threshold, which is 1.596 for this current period, and the taxable income now would be what? 198,979. And then you would multiply that 118,979 by 25% to get your income tax for Mr. Martin Reed. Pause the video, write it down please. Go back to the video again, and go back to your notes as well to remind yourself of what was done here. So the aim of the matter is to adjust the profit based on adding back what should not have been deducted, good, and also subtracting what should be what? Subtracted. Alright? I wish for you a wonderful day. Another question will coming up shortly. Another worksheet for you to practice. God bless you and keep you, gentle folks. As I said, pause the video, write this down for me, please. Take care, enjoy the rest of your day.